Hi, I'm Chris Wright, President of Wright Wealth Management Group. Today we're going to discuss non-correlated and non-traded investment strategies that are available to many investors here in the U.S. I often receive a lot of questions from investors as to the different types of non-traded asset classes that are available, but also the different types of investments that are available for their portfolio. Many broker-dealers do offer some of the better non-traded investment strategies, but do not offer a lot of selection for investors. As an independent financial advisor, one of the reasons I made the decision to be an independent over 18 years ago was because I wanted to be able to align my approach and my desires for my clients' diversification to be able to allow many of the better of these non-traded investment strategies. Many firms may offer just one or two of these non-traded opportunities for investors. Some of your independent broker-dealers, however, will allow on their investment platform dozens of non-traded investment strategies that an investor can participate in or choose from in order to obtain more diversification as compared to a broker-dealer that may only select one or two of these non-traded investment strategies. One of the things we have to remember with non-traded investment strategies is the money is illiquid. There is no market where you can sell the shares on a daily basis. That's why we have that additional diversification outside of the market. So for a portion of an investor's portfolio, and for those who qualify, investing in non-traded investment strategies can give an additional layer of diversification that they may not otherwise have the ability or opportunity to participate when they're associated with a large investment firm that doesn't believe in or does not offer many of the better sectors in the non-traded area. I'm often asked with non-traded investing if the best investment vehicle or best type of money to use for that type of an account is IRA money or non-IRA money. Really, with many of these non-traded strategies, you can use either. You can use money from your IRA. A non-traded account can be invested in an IRA brokerage account or a non-IRA, like a living trust or an individual account. Either type of monies are available to invest into these non-traded investment accounts. However, you have to remember with any non-traded held in an IRA account, any distributions that you take out of that account will be taxed at ordinary income levels. Versus with a non-IRA account, when we invest in a non-traded investment, the money may have some additional tax strategies built in to the portfolio. For instance, this may or may not occur with all accounts, but for some it does apply. Because the investment is based upon commercial real estate, the investment company will pass through onto the 1099 in some instances the depreciation and the write-offs of the corporation. Therefore, the actual income generated for the account that the investor may receive may be deferred to a future date when the portfolio sells off. So for instance, if an account has $100,000 invested in it with non-IRA money and the investment has a 6% distribution rate, on the 1099 we know that there's been $6,000 of interest or distribution that's been passed on to the investor. However, in box 1, let's say, where it lists ordinary income, the ordinary income amount that's taxable out of that $6,000 may be listed as $2,000. Well, what happened to the other $4,000? The $4,000 that was distributed is classified as deferred distribution, meaning that at some point down the line when the company sells the portfolio or has a liquidation or they go public, the investor will have to recapture that compensation back to them. But the benefit with non-IRA money is the investor may be able to claim that as long-term capital gains instead of ordinary income. And as we know, for every ordinary income bracket, the associated long-term capital gains bracket is generally lower, therefore reducing the total tax impact on the investment. That's a neat benefit of the non-traded investment strategies. For those strategies that offer that concept, in order to help reduce taxes for the investor when they are using and investing with non-IRA money. One of the reasons why many investors decide to associate themselves with independent financial advisors is because independent advisors often have more opportunities to bring to the table additional non-traded investment strategies that investors may not have the opportunity to invest in at some of the big financial firms. I'm Chris Wright. Thank you for joining us today concerning non-traded investment strategies. We hope you enjoyed it and look forward to you participating with us in the future.